Welcome back. You're watching the Citizen Business Center. Now, in his 2015-2016 budget speech, the National Treasury Cabinet Secretary Henry Rotich announced that the government's intention to allow ordinary Kenyans to buy Treasury bonds through their mobile phones. And on Monday, that plan culminated in the launch of the M-Akiba bond, which is Kenya's first mobile-based Treasury bond. Now, the 5 billion shilling bond, which will be on sale on the 21st of October, will afford Kenyans with as low as 3,000 shillings an opportunity to invest their savings for what is expected to be a better return. For more details on the inaugural mobile bond, I'm joined by Geoffrey Odundo, the Chief Executive Officer of the Nairobi Securities Exchange. Thank you so much for joining us on the Business Center tonight. First things first, a groundbreaking move indeed. What are your thoughts?
This is a milestone for Kenya. Again, for the first, being the first in the world to launch a bond, a retail bond, through a mobile platform. I think for us it's phenomenal. We are so overwhelmed with what has happened. Our immediate thoughts are that for the first time we'll be able to see the level of savings in Kenya go up because of accessibility. The 3,000 is a very affordable threshold, so we intend to see the current retail participation on bonds, which is at 2%, increase phenomenally to well over 10 or 15% in the near short term. So we're really keen on that. The other thing is that if you look at our current gross national savings to GDP ratio, we are currently at about 11.8%. Now again, we would like to see that number move up, and that's a very attractive position for us to look forward to. But for me, what makes me, or what makes us as the capital market partners and the government excited is that Kenyans will now be able to actually participate in a larger number towards national development. Because this bond is an infrastructure bond, so it's clearly targeted towards certain projects that the government is undertaking. And ultimately, there's a return for the investor, which is way above what the current banks offer for small deposits. So all that combined factor is pretty very exciting moment. All right.
So I believe the lowest amount of money somebody could use to buy a bond was about 50,000 shillings for the longest time.
Correct.
At 3,000 shillings, I mean, bonds, bills, all these things usually sound so technical to the majority of Kenyans who we speak with. Yeah. At least on our channel, I could say, what would you tell them? You know, if they have 3,000 shillings, is this something that they should seriously think of?
Certainly. Now, let me first of all just demystify what a bond is, because I think Kenyans need to know what a bond is. It's not that you're giving away your funds to some project directly. Now, the government normally borrows money from the domestic markets, from Kenyans themselves, and they use certain instruments. Now, one of the instruments they use for the long-term borrowing is a bond. It's called a treasury bond. It's basically a promise on your note. It is a commitment from government that if you give me X amount of money, after a period of so much, be it 1 year or 2 years, 3 years, I will refund you that money. But in the meantime, I'll be giving you interest in intervals of 6 months, 3 months, 6 months, in that kind of arrangement. So you're actually lending money to the government, and they're giving you a commitment. Why is it an attractive opportunity? The risk on the government is considered risk-free, because really the government is the supreme, really the supreme body. If you look at every existing nation, so giving the government is more secure than giving your money to another party. So what this does, the opportunity to participate and invest this money in government have been very restricted, because at 50,000 shillings, if you consider majority of Kenyans who really are in the informal sector, that is quite a high amount, and it's not something that they can easily access. But bringing it down to 3,000 shillings, and not only that, making it easier for you to buy that investment through your telephone, through your whichever mobile operator you're using, makes it a very, very accessible. And again, there's no restriction in time. You can actually buy it at night, you can buy it in the morning, and you're certain to get it, because the bond will be acting on sort of a first come, first served basis. So there's no what you call proportioning of an oversubscription, etc. So once you achieve the full fulfillment, the bond closes. So it's a very, very easy instrument to understand.
How do you see the kind of interest rates that will be playing around this bond?
The interest rates are going to be extremely attractive. As you currently know, the spread between what depositors get and what the banks lend at is pretty wide.
Because it's about, 6%, almost at the highest.
Excellent.
And up to 24, 25%.
Yeah. So what this does, it gives a premium, it gives a higher rate above where the normal average small deposit rates will be. And we anticipate it's going to be quite a good rate. I expect that. And the other thing that I must mention, it is actually a tax-free, net of tax. So there's no taxation. So if we declare a rate of X, that is the rate that you'll get. There's no withholding tax on it. It is an infrastructure bond, so it's a tax-free instrument. Yeah.
All right. I think we need to touch on the Securities Exchange as well. And keeping that 19% that I've just talked about, the government, the recent bond, the one-year bond was closed at 19% interest rate. I don't know if returns at the NSE have been that high. How has the NSE performed? And are people moving slowly away from the securities since the bonds are really offering quite some attractive interest rates?
There's normally what you call a relationship between what happens in the money market side and what happens in the equity side. When the money markets rates rise, then definitely you see interest from investors going towards the money markets because the rates are more attractive. And what happens is that because there's no demand on the equity side, then the equity market goes down. So what we've seen since, say, June is that the index has come down close to around 16%. And what this has done is that our prices have really come down. The price of shares have really come down because people are focusing more of their investments on the equity side, on the bond, on the fixed interest instruments. That notwithstanding, the international investors have seen an opportunity because they know the markets will recover. So we are still seeing turnovers from the international investors almost 70 to 80%. Which explains why, if you look at our year-on-year performance, our turnovers are even higher than what we did last year. But it's mainly foreign. But the local institutional investors are basically focusing on the bank deposits and the bonds, which are paying more attractive.
So the NSE itself listed as well. It's about a year now. How do you rate the performance of your stock?
Terian, I'm very glad to say that our stock has been extremely defensive. As you know, we listed at a price of 9 shillings and 50 cents, and we went to a high of 28 shillings. We came down to around 21 shillings after correction. What has happened is that since we settled at 21, we have actually been defensive at that. I think the lowest we've seen is about 18.90, but it's now corrected back up to 20. And what we're saying is that from the NSE perspective, the investors have seen that we have got a strategy to bring in new products, new platforms, things that will just generate more revenue. So they're taking a long-term view on our stock, and I think that's very encouraging. And actually, if you look at our profile today, majority of our investors are international.
All right. Now, the Securities Exchange introduced a platform for small and micro entrepreneurs, small and micro enterprises to list on the GEMS segment. We've got now, what, about 4 or 5 of them currently?
4 companies,
4 companies. Are we expecting some more to list soon?
Yes, we are. It's been I know there's been a bit of a lull or a quiet time in the market rather than we had expected. A lot of that was because there was some incentives that we needed to put in place. One of the key incentives that has happened in the last finance bill is that if you list through an introduction, you get a 5% deduction on your corporate tax. So that is actually going to see a large entry. And then also we have had new interest from international companies who want to list on the GEMS market. So because we are trying to find ways of reducing the anxiety and the fear of becoming a public company, we are educating the various SMEs. We are educating all these GEMS potential companies. We are doing forums with them, and we do expect to see quite a number of listings. I can certainly tell you we have got a few before the end of the year.
All right, quite some good developments this year. The capital gains tax was also scrapped off just 1 year after it was introduced. That was budget 2014. What occasioned that particular move? Of course, we see some intense lobbying that must have been happening in the background.
Now, the capital gains tax, Terian, was introduced, took effect on 1st of January 2015, and prior to that, there was a lot of appeal for government to reconsider that, because we could see the risk of the market coming down, making Kenya a very competitive market compared to our peers in the region. So we did try to talk to them. However, the law was set, nothing could be done, and so what happened in January? We saw a 40% reduction in turnover, and that actually informed the government that, okay, there could be an issue here. The second issue is that there was a bit of, the expected turnovers we expected in the year sort of went down because of people saying the markets are expensive, and so looking for alternatives. Now, that informed the budget decision this year to introduce a levy. And then also the challenge of collecting that tax, because the obligation of collection was being put on brokers who did not have the full information about a client's investments. And we're talking about clients who had even invested in 1975. So if you look at his base price and market price, the spread is so huge because there was no indexing of that gain. So a lot of that was done. We actually lobbied, we discussed with government, and we are glad to say that in the finance bill signed last week by the president recently, that section has been removed for stocks traded at the exchange. So if you trade your shares at the exchange today, it's tax-free.
All right.
So that's really a very exciting moment for us.
All right. Thank you so much. We'll end it there for tonight. Geoffrey Odundo, the CEO of the Nairobi Securities Exchange, giving us an update of what's happening there. And most importantly, the M-Akiba platform, where you will be allowed to save, to lend the government as little as 3,000 shillings. Michael?
Investment being brought closer and closer to you and I.
Absolutely.
Thank you very much.